Hello everyone. At the start of May month 2024, Nifty was trading around 22,000. At that time, based on the earnings, we did the valuation and mentioned that Nifty was cheaper and possibly it might move above 25,000. So again, now most of the major companies have released their Q1 earnings. Hence, the fundamentals of individuals and also in the index is changed. Here, most people feel very comfortable to check the fundamentals of the individual stocks, but it's little bit tricky to evaluate for the index, especially the major index like Nifty and Bank Nifty. So in this video, like what we did in the May month, we are going to do the same thing. We are going to discuss about the present valuation of Nifty and to some extent about Bank Nifty. Like, is it cheaper, how it's compared globally, and also how it performed in this year so far. Hence, we can able to come to some sense where it's all going. Please watch the video till the end. It will be very much useful for the viewers and also for myself. Here, nothing technical and nothing political and none of the uncertainty in the world like recession or the Indian state election or the US general election. None of those influence will be included, rather just from the earnings and valuation perspective. And also at present, there are some negativities around the banking stocks like deposit growth issue, liquidity issue, etc. So possibly I will clarify those on the different video. First, how it compared globally. I mean, at present, there is a recession uncertainty and also there is a rate cut uncertainty. Like in the September month, how much the US government will perform their first rate cut, 25 basis point or 50 basis point, and subsequently how many more rate cut until the end of this year. However, strong economics macro and individual stocks earnings made the US market major index S&P 500 and Nasdaq year to date to increase near 14%. I mean, at one point around July month, there was a strong rate cut hope and there was no recession fear. So at that time, both S&P 500 and Nasdaq increased 25 and 20%. But as I said earlier, now there is a recession fear, which in turn decreased both S&P 500 and Nasdaq year-to-date increase down to 14%. In comparison, year-to-date, in line with S&P 500, Nifty also increased approximately 14%, but the odd man out is Bank Nifty. It increased only around 5%. So in the global comparison, Nifty is valued okay and Bank Nifty is underperforming Nifty by 10%. Then fundamentally, if the valuation is correct means, then year-to-date basis, Nifty earnings has to increase around 14% and Bank Nifty's earnings to increase 5%. Isn't it? Let's see how they are doing. At the end of December 2023, Nifty's earnings was 938 rupees. That now after the Q1 results increased to 1075 rupees per share, which is roughly by 14.6%. So the present Nifty valuation is in line with the December end 2023 Nifty value. Hence 21,700 in the December month and 24,800 now in the September month is the same. However, in Bank Nifty, that was not the case. Earnings increased from 2,915 rupees to 3,445 rupees, which is 18%. So for 18% earnings increase, Bank Nifty increased only by 5%. Meaning Nifty is fairly valued and Bank Nifty is way cheaper compared to 9 months ago. Just for reference, at that December end, Bank Nifty traded around 48,300. In 9 months, only 2,300 points for the 18% earnings increase. Anyway, my point is both of them were not overvalued. Now question is, what's next? Let's discuss this in little bit more detail. As I said in my multiple pre-market, for Nifty, the 2-year low PE ratio in the worst case scenario, I hope everyone remember in June 2022 when the US inflation increased all the way up to 8 to 9%, Nifty PE ratio went down approximately to 19 and in best case in July 2023 it increased to 24 and on an average for the last 2 years Nifty's PE ratio was 21.6. But we can't take it straightforward since every month SIP value is now increased to around 23,000 crore rupees, which doesn't looks like it's going to stop. So for quarterly basis, at least 65,000 crore rupees liquidity keeps on coming into the investment space and for sure major big chunk of that money is now regularly coming into the equity market. Hence, we need to normalize it. I don't have any fancy calculations for it, so I'm just adding 0.5 P ratio extra as a correction to the average. So the nominal 2-year average fair valued P ratio will be 22.1, and on September 6th, the current PE ratio was 23.1. Now, if I plot all those in the Nifty value like low PE, high PE, average and nominal, then this will come like this. If required, please pause and have a look. For the present day, Nifty's range is calculated between 20,425 to 25,800. On 6th September, it was trading at 24,852, which means at present Nifty is slightly near to its overvalue territory. Hence, the immediate defense support for the present earnings is 2-year nominal average PE value 23,750. A month ago, there was a sell-off due to Japan issue. So no wonder Nifty took the support around the same place between 23,750 to 24,000. And for the worst case scenario, the first line of support will be at around 23,200. In the upside for the present earnings, the immediate resistance is at 25,800. So this is the present scenario. For future, let's do our regular assumptions. Generally, Nifty index in a normal day, their annual earnings will increase somewhere between 10 to 15%, and in the good year, it will be around 20%. For example, last financial year 2024, it increased 20%, but on FY 2023, it was only 12%. So let's assume the worst case 12%, not the worst case like 2020, which was completely odd man out. The normal worst case will be 12% for the year. That for quarter, it's 3% increase sequentially. So if we consider that 3% sequential earnings increase for September quarter means, then at the end of October 2024, this 23,750 nominal average present point will move to near 24,500. Here in this graph, for both 2-year nominal average, low point support and upper resistance, I highlighted it as a both sides arrow. I mean, this 3% earnings increase is what we assume expected to happen, but in reality, anything can happen. It can be 5% increase or 2% decrease. In those cases, all those points will change. Hence, between now and November, the fair valuation of Nifty's range is 24,500 and 25,000. And if we assume another 3% increase in the subsequent December quarter means, then the present average 23,750 fair value will further increase to 25,200 at Jan 2025, and in May next year it will be near 26,000. I know it's a lot of numbers, but it's very important to understand. I mean, if the global momentum deteriorated in future like recession or new conflict in other parts of the world, not in India, then Nifty expects to move sideways, but as long as earnings didn't drop and increase 3% every quarter, in Jan 2025, Nifty is unlikely to drop below 21,600, and in best case scenario, in the end of Jan 2025, Nifty can go all the way towards 27,370 mark. Again, if earnings dropped or the conflict in relation to India means, then that's a different scenario and that will be different story as well. So just based on earnings, if we assume 6% increase from the present level, which is possible and the most probable scenario, then the range for year end December 2024, it will be between 21,300 and 27,000. And if the global momentum is like what today means, then the range will further narrow to 24,500 to 26,000. Hence, here the takeaway is those who are trading in the long-term Nifty index option always have the earnings consideration to adjust or add the position. Just repeating final time, this Nifty range and analysis projection is for present day earnings 1075 rupees and expectation to increase 6%. If it didn't or tomorrow earnings dropped to 950 rupees, then it's a complete different story. Regarding Bank Nifty valuation, I will make a similar video in future because it also involves a lot of calculation. Don't want to stuff everything in one video. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this as not a SEBI registered advisor. I am doing this for me and viewers educational purpose only. Thanks for watching.